As you can see, the market is pulling back slightly. I mean, we've been pulling back over the course of the weekend and leading into Monday. The big question is, what is the stock market going to do? Jerome Powell will be speaking on Tuesday, and of course, there will be profit taking before that. The question is, do we bounce following that level? Well, that's what we're going to address on today's show. And if you do take a look at this tweet over here from Trader J, is this pattern going to repeat? That is the big question. Is this pattern going to repeat? I've let you guys who are loyal followers and viewers, thank you so much for viewing the show. Over time, I've let you know my thoughts around this. And I've said pretty much we're looking for a new trend to be established, right? So you're looking for the higher high, which we now have. This would be the high high. And that's why I told you, do not FOMO buy. Do not FOMO buy into the market. Wait for the pullback, and then you're looking to capitalize on what would be the next higher low. If that higher low does not hold, then definitely a lot of depression would set into the market, and potentially you could go down into those lower prices. So chart kind of going viral, but what he has to say over here is, I've already shown that this is different. Bulls compare this to 2015 and bears 2019 bottom. If there is a death cross on the weekly chart, then we might get a different type of bottom for Bitcoin. It's just a probability. If it does happen, then imagine that would be max pain. And yes, we are already getting that death cross, which I'll show you at the moment, in a moment's time. The fear and greed is at 56, so it started to tick back down. Last week, we made it up to about 61, coming into that 25K resistance. We didn't manage to crack through that level. Here it is. The trains are approaching, as Benjamin Cowan says. And at the moment, it's really inevitability at this point that these are going to cross. The question is, do we spike through there first, or do we first pull back to the lower levels? At the moment, it's looking like we are following the pullback zone, or we're going into the pullback zone. All the levels I'd given you the whole of last week, those remain exactly the same. That's between 20,900 and 21,900. That is the pink box over here. This is the area of interest where I would be looking for a higher low to form, and then hopefully on the next attempt we can crack through both the moving averages over here as well as that strong horizontal resistance which is overhead. So it's all a game of probabilities, and in this market you need to have an if this then that scenario. And I'll show you a tweet explaining how you can go about managing your risk around that towards the end of the show. The Bollinger Bands over here have begun to expand, which is why you saw the volatility on the Bitcoin weekly chart kick up. You can see that by the low band over there. But now we're rejecting off of that top band. If we were to come down to a potentially worst case scenario zone, that would match up with the middle of this Bollinger Band, which also happens to be a strong area that was our previous resistance, which you can see we sliced through in one go. The open interest levels were low at the time, and the market was in backwardation, which is what led to that explosive leg to the upside. So now there's a possibility we come all the way back down, worst case scenario, to retest that level around 19,200. Once you start to lose 19,200, now you're opening up the possibility for a major bull trap. Whether we even get down to that far down into this market, I'm not so sure, but mark that level off as the kind of do or die zone for the Bitcoin price, is around that middle Bollinger Band. Once you start to fall underneath that, then you have the possibility that you're going to revisit all the way back down to the bottom Bollinger Band. As you can see, the bottom Bollinger Band right now on a weekly chart is coming in at 14,148. And if you do look to the left, the low that we set in was at 15,500. Now, I'm not saying that we're going there. I'm not saying that at all. I just want to pose both scenarios from the bullish and the bearish case to you guys, and then you can make your own decisions. So keep that in mind, that lower Bollinger Band at $14,000 level. I'm going to show you another chart in a moment that lines up with that. But ultimately, price is still in a range. So we haven't properly yet established a new trend. In order to establish a proper uptrend, again, you would need to see, well, we got the higher high, you would need to see the higher low, and then you would need to break out of that range. And probably only once you have this higher low, which would come in around $23,000, at that point, could you say that potentially the bottom is in and a new major uptrend has begun. Otherwise, in the time being, the way the market is reacting is this has been the primary range. So the range sits between 18,100 and that $24,000 level. You can see we wicked almost directly into that. I mean, you could argue you could probably pull this down so that it lines up with the body closes on the left-hand side from August, and that wick rejection over there proves that this is a range. I did also warn that even if you leave this range, there's a possibility that all that it is going to be a deviation. In the same way you had the deviation below, you could have a deviation out above and then still come back down. So the message over here is that there's no need to rush into the market. We still have probably at least a good year before you start to really, really take off in the markets. That is assuming, and that's a big assumption, that this market cycle is going to be like every other 4-year cycle that we've had before that. So do not rush into the market. Monthly, though, the monthly still does look pretty strong. You can see this marked off over here with both the stochastic RSI, where you have the bullish cross that's taken place, and the RSI on the lower end over here has also ticked back up, and it's reclaimed. Okay, it hasn't yet. It's ticking back down now, but if prices reclaim around $24,000, then this RSI should break above its moving average, which is the yellow moving average, and that should begin to turn up. So very, very high time frame. It's still looking like there is a possibility for more upside. Now, I told you to remember on the Bollinger Band, the lower Bollinger Band on the weekly chart, the $14,000 level. I did pose the possibility to you guys of the Wyckoff accumulation pattern, and that was a show that I did all the way back on the 27th of December when prices were, where was the 27th of December? I'll mark it off on the chart for you. The 27th of December, we were over here within the market cycle. I said to you, watch out, this could be a falling wedge pattern and a Wyckoff accumulation schematic whereby you could have a breakout to the upside with a measured move all the way up to possibly $30,000. Now, what happens if price comes all the way back down to that lower Bollinger Band at $14,000 around there? Well, it wouldn't be helpful, would it, if I told you that in 3 weeks' time, when price is already down there, what kind of an analyst would I be leading you guys? Not a very good one. So I'm outlining to you the possibility of that right now. Now, I'm going to quickly bring this schematic up over here, the Wyckoff schematic. So you can see, if I do zoom that in, there we go. Let's just go through like that. This is Wyckoff schematic 1. Let's make it brighter for you to see properly. Okay, this is Wyckoff schematic 1. So you had the ST phase, which is in phase B. And according to this, we should already be in phase D now, consolidating up against the resistance over there. We should be in phase D, looking to expand through that level and go into phase E. But there is two different, this is Wyckoff schematic 2. There is another Wyckoff schematic, which is Wyckoff schematic 1. And that opens up the possibility of a secondary retest. So let's bring that one up. So Wyckoff schematic 2 would be this one over here. Just make it big. There we go. And brighter. So if you have the secondary spring phase, as you can see, prices then dip below the first ST phase in phase B, and that would mean that you're having a secondary retest, and that would take you down to the lower Bollinger Band at 14K. I'm not by any means playing it that way. I'm leaning towards the higher high has been made, and we're now looking to make a higher low. But go and research the Wyckoff schematics. Go look at accumulation schematic 1 versus accumulation schematic 2. If this is indeed going to be a secondary retest, you would expect that that retest would break below this level over here. You can see marked by the high volume. That's the first ST phase. Price came down. It would scare all these people out over there. Secondary retest, recapture the main range, which is the main range is coming in around that $17,500 level. And then pretty much prices will start to rally aggressively, having shaken out the so-called weak hands, as they call them. So keep that in mind. That's the Wyckoff accumulation schematic that I'm keeping an eye on. Otherwise, I'm looking mostly what I'm looking at is buying a high low. I need to see when the high low gets formed, and I'm hoping that a high low gets formed around this $21,000 mark over there, and then you can break through this zone and target up towards the 30K. It doesn't really matter what your bias is, by the way. A lot of people get super confused about this. It doesn't really matter whether you're bullish on one day or bearish on the next day. What matters is how you manage your risk. Your job is to manage your risk with regards to your trading. You should be playing a defensive game until you're in a strong trading market. Currently, we're still within a ranging market with the potential of the trend fully reversing, but we yet to still get the higher low. And then you need another higher high and another higher low after that, at least 2 in a row before you can prove a proper trend change. So Markets and Mayhem in this tweet over here said that we've just experienced some of the most significant short coverings by hedge funds in 6 years. And you would understand that when shorts start to cover, price would of course rally, right? Because they have to buy back their positions to close their shorts out. And is that possibly the case of what's happened in the stock market? Well, according to Game of Trades, retail sentiment has turned very optimistic towards the stock market. Dumb money confidence is now at extremely elevated levels, according to this chart over here. Excuse the terminology, dumb money. They're essentially referring to retail money. Retail money can actually make more money than hedge funds, believe it or not, because you don't have so many limiting factors within how you have to take your trade. So take that with a pinch of salt. But then they say, well, smart money confidence has been dropping off like a stone, meaning that they hedged for the short side. So with regards to the stock market, this is either going to be the biggest bull trap ever, or it's going to pretty much be a massive squeeze to the upside, because at the moment the stock market and major funds are definitely positioned more towards the short side. Now you have a key pivotal level over here on the S&P 500, and that is the monthly level. I would really suggest that you mark that off on your chart. That level is coming in at 4,142.30. I'll say it again, 4,142.30. So key level. Price has currently opened up underneath that level, and we opened up February pretty much straight to the downside. If you put this on a monthly chart, let's do it. Put that on a monthly chart over there. You can see we spiked up above, and then price has opened straight back to the downside. So this will be key. This is a very important level for the monthly chart to reclaim. If this starts to turn over, a lot of panic could set into the market, at least as per the retail sector would start to get stopped out and panic sell their positions. So you need to be looking at those low levels. I'm going to give you the key pivotal levels for Bitcoin. Those levels must hold over the coming week. This week will be very telling, very interesting and telling with all the economic data. I think we have an upcoming CPI print as well within the next 2 weeks, which will also be important. Now, I did also outline already way before that the dollar is looking like it's falling into, it's in a falling wedge pattern. It's going to most likely break out to the upside over here. And we did tap the liquidity. Once we reclaimed that liquidity zone, which was at 101.297, then I knew the dollar's probably going to bounce. And for those of you who have watched the shows regularly, you'll know that I told you this would provide you with the opportunity of your next higher low. Once the dollar bounces, you're looking for the dollar to set in a lower high. So the zones that we're looking at is this pink box over here, which is between 103.5 and 103.8. That's the first area of interest. If the dollar can start to roll over within this sector, within this section, that should simultaneously provide your opportunity for wherever crypto will set in its higher low. If the dollar makes it to the next section, I'm looking at 104.6 to 105. Now, that's where I would expect that Bitcoin at that point will probably make it to about the 20K level. This zone over here is most likely going to be around $21.5 to $22,000. So mark that chart off, consider it, use it to your advantage. Typically speaking, dollar going up means risk on assets are going down for the most part. So watch that carefully. The VIX is another thing that's important. I have marked off over here all the way back from January the 5th, around that December-January period. You can see the way that the VIX consolidated. Look at the consolidation. and then compared to what we're seeing now, that set the ultimate stock market top, which we saw take place in that late December, early January. And now you kind of have the VIX reacting in the same kind of way. We almost tapped that same level. Let's just move this across. So I have got this zone over here. If the VIX starts to expand over here with the dollar rising, pretty much until this starts to turn back down, you don't really want to be taking on too many positions. So you'd want to see something like this, VIX going up. As the VIX starts to recontract back down and the dollar recontracts back to the downside as well and squeezes to low prices, you don't want to be holding longs in risk assets. Benjamin Cowan showed over here that Bitcoin dominance, excluding these stables, has been putting in higher lows since May of 2021 and really actually since January of 2018. So here's the picture. This is Bitcoin dominance, excluding the stable coins. It is in a clear uptrend, nearing the trend line, looking for potential bounce from this zone again. But ultimately, anytime that it gets towards the range high, I would definitely be willing to pivot out and switch into altcoins. Here's Bitcoin dominance, excluding the stable coins, or excuse me, including the stable coins. It looks almost the same. The only difference is here you have the mid-range as opposed to the range high, and the range high comes in much higher at about 48%. So marking off on the usual Bitcoin dominance chart, so not the chart with excluding the stable coins, I'd be watching for this area. If the Bitcoin dominance does continue to drop over here, it could go down to about 42%, creating a little bit of an altcoin rally, and then alts will continue to suffer once this bounces to the upside. And I did also mention to you guys, look at the mid-range over here. Mid-range was lost, but a reclaim over here would just be another higher low, and then alts would suffer. Go and look at this site. A lot of people don't know about this. This is a pretty easy to use site. Just type in, is it altcoin season on Google? This chart should come up over here, and you can kind of zoom out historically to see in relation to the historical data. Unfortunately, it does only go back to July of 2017. Where are we within the greater scheme of things? Well, typically the major market bottoms for altcoins have taken place when it squeezes down to those lower levels being around that 8 to 10 mark. As you can see, the lowest that we currently got was about 22 was the lowest that we got. In 2018, alts went down to the 2-point mark, which is crazy. 2019, they also went down as far as 5. And in this cycle, we haven't actually got anywhere close to that. So it is probably something you want to consider when you are taking your positions. You have a little scale on the left-hand side of here showing we're currently at 31. I would say that the maximum opportunity lies in buying your altcoins when they look like they've set in a major bottom. What does a major bottom look like? A major bottom is when it consolidates at the range low for many, many months on end, and you see this Bitcoin season index all the way on the left-hand side, meaning that it's not alt season, and you kind of want to be laying off your alts when they are overheated. Anything that's above 80 is where you want to be considering to sell your alt positions, but we're nowhere near that type of cycle at the moment. Okay, total 3. Total 3, we did break the trend line, but ultimately you're looking for a trend change, and there is no trend change yet. So you have a lower high, another lower high. This is still yet another lower high. I told you that real trouble sets in, and you can confirm this as a local top on the altcoin chart over here, which is the total 3. So excluding Bitcoin, excluding Ethereum. Once you break below this zone over here, this zone is 358.5 billion. If you see this chart come below that 358.5 billion, you can confirm this is a local top, and then more than likely this is going to come down much further. Now, again, the same thing that I said with Bitcoin. I'm not necessarily looking for new lows on this. I'm still looking for this to potentially set in a higher low and for the market to have shifted. So if I see this come down over here and it starts to roll over, I will start to place my bids with a stop underneath there on altcoins, looking for an opportunity to get long, because we know that altcoins are the higher beta move. Only if you know what you're doing. Most altcoins are going to suffer against Bitcoin in the long term. This is a trade opportunity, not an investment opportunity. Okay, Bitcoin, what are the levels? So you can see that the RSI is continuing on to the downside over here, but I still don't think that it's all doom yet. I just think that we're having a normal pullback, which is what I've been looking for over a week now. So the levels to watch, you're looking at the 0.382 fib retracement level. That comes in at 20,904. If things get really, really bad and it pulls back to the 618, it's okay as long as you don't see closes that are happening there. But guys, consider the amount of stops that have built up over here. So all the guys that have been going long, look, a lot of people would have missed this part. I would say that the stop started to build up from here because this just ripped. Most people missed that entire move. So stops are here, stops are underneath this whole section over here. You can see where price is already coming. So what's going to happen is, if these stops start to get taken out and price doesn't react very, very quickly out of that area, then you do risk breaking down this trend line. Once you get to these levels, all these guys that have been accumulating are also going to start to panic sell. A lot of people will make claims that they bought the bottom, but I can promise you, anybody that bought the bottom also bought this bottom. They bought this bottom, they bought this bottom, they bought this bottom, they bought this bottom. Nobody just suddenly bought this bottom over here. I mean, maybe it's like less than 1% of the people that actually did that, which means that even the guys that bought this bottom are technically underwater. Because where are you at now? Well, if you were somebody that was buying the bottom over here since 36K, then you bought this at 27K, then you bought this at 20, where is your average price? Actually, your average price is probably around 28K. What's interesting about that is if you do get a major relief rally and you do consider that where your average price is, that average price also lines up with the underside resistance, which is coming in that 30 to 35K zone, which means that price could technically turn before then. So that's why upside targets 28 to 32K. If the market does find a higher low here and we start to rally, that is still the levels that I'm watching for. And you can see over here from the Crown Trading app, he shows the global open interest levels. And I like to use this for, macro resets within the market. You can see that the open interest levels have actually been relatively low in the grand scheme of things. There hasn't been too much leverage within the market, which does also open the possibility that the market has reset and we could potentially be targeting higher prices. And I'm not looking for an enormous major breakdown. All the moves that we've had up have been relatively healthy from a leverage standpoint. You're not seeing anything overheated like you did all the way back in the previous cycle tops. So Lucky Chart Apes, I wanted to bring this up on a previous show for you guys, and I think this is very, very important. This is exactly what trading is. And he says trading is a decision tree. The vast majority of people want this is what will happen next, when in reality are just making a series of if this, then that decisions, which doesn't have to be complicated. If you just accept that anything can happen, and that's exactly it, guys. Anything can happen. Literally anything can happen in the markets. Nobody should tell you that they're 100% certain of where price is going. In fact, if anybody says they're 100% certain, you shouldn't listen to them. You should block them out, probably unfollow them. Don't watch their shows anymore or listen to them, because nobody can be certain. So this is how it works, right? If price comes up to the top over here, to the range high, and it starts to reject, take profit, because then you're probably going low. If it does break above that, then hold on to your position or add to your position, because now you're forming a new range into high levels. If price does break below and it comes down and you're holding longs, which is currently, this is the scenario that we followed now. What do? Well, you should cut your position. Then by cutting your position, price probably comes lower. You come into this zone and you ask yourself, if it manages to hold this zone and bounce, well, then you add to your position and you ride it back up into the new range. If it breaks that level, now you got to wait for low, because you're going to take out all the liquidity on the left-hand side, which is a major inefficiency within the market. Remember, inefficiency means if price moved up radically through that zone and it comes back to retest that area, it probably will cut through to the downside just as quickly as it did to the upside. Okay, moving average wise, looking at the exponential moving averages, look, same thing as what I've said before. we're holding this trend line. As long as you're holding above this trend line over here, most likely there is the opportunity that Bitcoin can still bounce and you can target back towards the range high. If you do lose that, the next level to look at is going to be the 200 exponential moving average, which is put on the 4-hour chart. That is one that I use to build my trading in a trending market. I add to my positions and build my portfolio around this moving average. So if price does break this and it comes into here, I'll be looking to scale into positions for long-term hodl positions. If we start to lose that, then of course I'm going to cut the position because we're going all the way back down to the range low. So for the time being, this is your mid-range. Your mid-range actually lines up exactly with that 200 exponential. That's coming in at $21,450. Let me know in the comments what your thoughts are. I ran a poll on Twitter, kind of like, are you bullish, bearish kind of post. And 60% of the people were actually still pretty bearish, saying that this is the biggest bull trap ever. The other 40% said that they're looking for up only. So let me know in the comments, what do you think? What are you doing along your trades? How are you playing this market? How much have you entered? Let me know as well. Let me know what percentage allocation you have in the market. Are you 10% allocated, 20, 30, 40, 50? For those who want to know, because I get asked this a lot on Twitter, what is my percentage allocation? I'm allocated about 10% into the market at the moment. I scale in slowly, looking for high lows, manage my risk very well. I'm about 10% allocated into longer term positions, which I'll cut in a heartbeat if I need to. Okay, Crypto Nova. This reminds me as well, tomorrow, guys, I'm actually hosting a Twitter Spaces. It's going to be at 10 a.m. EST time. Go follow me on Twitter over there. I have a couple of guys coming on, one of which is Crypto Nova. He's going to be one of the speakers. So let's take a look at this chart over here. He says liquidations in the 7-day time frame. The SPX, which is the S&P 500, it closed red on Friday, so it might open red again on Monday. He made this, I think, last night. He said this could trigger Bitcoin to hit the liquidation levels at 22,450 to 22,300 at the start of this week. So as you can see, there are the liquidity zones coming in just above $22,000. And then he says, then at that point, if it does break below that level, then we'd expect low liquidity pools getting hit around 20,800. That would be next. But it is possible that we see a last push up to $25,000 before a bigger retrace. That's kind of the way I'm viewing the market as well. So it'll be an interesting conversation with him tomorrow. If price does make it to that 20,100 level, that's where I'd be looking to add more to my positions, because I do also expect first that you're going to take out the liquidity at 25,000, possibly even make it up to that 28 to 30K level before any major further downside. And he says, and yes, I am anticipating a sharp retrace. The invalidation would be a break of 26,000. Bitcoin is starting to look exhausted, and there's liquidity at 25. Many imbalances created in this rally. So here you can have a look at his chart lineup. He's showing, this is what I've shown you at on the 4-hour chart, where you have that diagonal trend line. He's looking at a complete sweep of that liquidity, which has not yet happened yet. So maybe later today or tomorrow, we'll have a little sweep further down below. Grab that liquidity, take out all those longs that have placed their stop losses here, and then immediate bounce straight to the upside. I won't call for lower prices yet, like he's shown yet. I would take it that we're going to break that major resistance at 25K with the big death cross that's taking place. And then we'll see if we can hold above that level or not. If we can't hold above that 25, 26K level, then yes, you're going to probably get slammed straight back down. Okay, so that's it, guys. I think that brings us to the end. Looking at the 1-hour chart over here with the open interest, stablecoin futures, everything seems pretty healthy over here, in line with the market, nothing out of the ordinary. So that brings me to the end, guys. Please make sure that you give the video a like, hit the bell notification, and then also subscribe to the channel if you're not already. And then what else? There is, I think, one more thing. Let me just quickly open this up for you. All right, in terms of, there you go. In terms of the giveaways for the Rolex, a lot of people have been asking, what's happening? Are we giving the Rolex away? Well, I think somebody may have claimed one of them, but it is still available. The competition is still available. We have 2. I think we might even have a 3rd Rolex at the moment. So sign up using 𝗣𝗿𝗵𝗺 or 𝗏𝒍𝒍 below if you do want access to that competition. And then also check out Prime XBT. We've been running the copy trading strategy over there. I will update you around the copy trading strategy probably on tomorrow's stream. That's it from me, guys. I'll see you all on tomorrow's video. Have an absolutely stellar day. I appreciate all of you. Stay safe out there. Don't ape in too quick. You want to protect your capital. That's what a proper risk management individual would do. Cheers for now.